This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall, during last week's reports, I mentioned having a short bias against the 86 figure here, which is represented by these two high wicks. Prices have kind of gone sideways here. I'd still have a slight bearish bias against that 86 figure. However, if we see the longer term resistance line, this is the favorable trade setup that I'd be looking for. What I might expect to happen here is a breakout above that 86 figure to come and test the longer term resistance line. So if you're short from near that 86 figure, I might look to take profits at this point, and again wait for that more favorable setup at the longer term resistance line. We might look to enter just beneath the resistance line with a stop maybe 50 pips or so above that line. The next chart is the Aussie Kiwi, and if you recall, during last week I mentioned that I had a bearish bias with the pair against the longer term former support line, now acting as resistance. I also mentioned, however, that we should wait for a close beneath that 124 figure because there was a chance for a double bottom, which did occur, and now a triple bottom, which seems to be occurring. However, in my experience, I do expect a downside breakout beneath that 124 figure that would be confirmed with a close beneath that level. So it's really a matter of personal preference in terms of how aggressive you want to be on this particular trade, but that is the level I'm looking for. Again, a close beneath that 124 figure would have bearish implications, so we might wait for that to occur before entering on the short side. The next chart is the Pound Swiss. Not much has changed here. I'm sort of just in a holding pattern with this pair, waiting for prices to come down eventually and test that longer term support line, but with prices about 800 pips or so above that line, this trade really isn't practical over the next 24 to 48 hours, so this is something we can just keep an eye on. The next chart is the Euro Swiss. If you recall, during last week's report, we did have the breakout above the longer term resistance line, and now we can see prices are coming down, looking like they're going to test that line from the opposite side, which is what I'm waiting for. Prices did come down near that 152 figure, but not close enough to to justify a favorable risk reward entry. So over the next 24 to 48 hours, we might look for prices to come down, penetrate that 152 figure, and hit the former support line, the former resistance line from the opposite side, which should now act as support. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.